Marketing always matters and we do it well. And everything is guaranteed, service over sales. Keep 100 plus clients always satisfied. So call me Neo, what you need just to strategize. One eye on the market here to make you profit.
What's up, guys? Welcome back to Market Statistics. My name is David Haun, your favorite realtor's favorite realtor, and today we're going to dive into the market statistics for December 2022. The trends have been pretty clear over the last couple of months as far as the market pulling back, but we're going to use this data to try to predict what the market's going to do in 2023 and try to figure out maybe when things are going to start turning around. So let's dive right in. Average sale price dropped again to $354,412. That's up 3.2% for the year, so we did still end up positive for 2022. So you can see we started right here. We ended up slightly higher here. But the market did pull back significantly since about April. And it was needed. You know, if you look at the last 3 years, we had pretty much a steady rise. Market values jumped from under 250,000 at the beginning of 2019 to well over 400,000 at one point. So that's almost double in a 3-year span. So we needed some sort of pullback, and it's been a pretty consistent, moderate pullback rather than having this huge drop off. And if anything, I would have expected the big drop off to be now during the winter season when things really slow down. My thinking is that we're going to start seeing things level off and start increasing again in the spring when the market picks up, but we will see. If you look at the last few years, comparing the past few Decembers, we're up about 11,000 from last December, and then obviously it was significant increases before that, especially here between 2019 and 2020. Huge increase here. And it's kind of leveled off since. Price per square foot has held pretty steady. I think the high here was at 223. We've been down to, I think this was around 215, but we're still sitting pretty consistent here throughout 2022. We're at $218 per square foot now. That's up 9.5% from where we started here. And I think that is as telling as average sale prices, because price per square foot is telling you what people are paying for a home based on its size. Comparing these two numbers, it suggests that the average sale price is lower because people are buying smaller homes. Diving into new listings, we've got 184 new listings for the month, down 32.4% year over year. This is huge. This has been one of the scariest factors in my opinion, as we were way up here. And even here, when we were getting nearly 500 new listings a month, we were still extremely low inventory. We still had 2 months of inventory at this point, which is an extreme seller's market. We need more inventory even here, and we've just seen it free fall since. So the number of homes on the market are dwindling significantly. Wondering why? You know, sellers got used to month after months of their homes increasing. You know, they built a whole bunch of equity over the last 3 years, and once it started going back down, they're like, well, I don't want to sell on a downtrend. You know what I mean? This doesn't feel like the right time. But the thing is, we don't know where the downtrend is going to end. And if you look at that overall price, average sale price, we're still much higher than we were a few years ago. So you've got a lot of equity in your home now. They're just not willing to put it on the market at this point to see what they can get for it. And that's really going to increase our inventory problems. But it's also going to keep the market fairly stable, because if you have too many homes and nobody can afford them, obviously that's going to drive prices down faster. Again, we're looking at this huge drop off since that would be about May or June of 2022. And then if you look at the past few years in December, we've traditionally been much higher. In fact, very consistent at around 316, 319, 315, a very consistent number of new listings in December, which is, again, traditionally a low month as far as activity goes, because buyers are, it's the middle of the holidays. Buyers aren't really active. Sellers don't really want to list during the holidays. So it's kind of a dead time, but not nearly as dead as what we're seeing now. This is almost half, not quite, but almost half of what we typically see. And to me, this is probably the most concerning of all the statistics that we're going to review today. The number of homes for sale is also dwindling, and again, that has a lot to do with the new listings coming on, but we're down to 493 in Tulare County. That's up 17% from last year where it was extremely low. And again, that's just because people were buying them up left and right. The buyer pool last year at this time was, it was crazy. You were getting, 20 offers per property. And, now we're obviously not in that market anymore. As far as pending sales, still dropping off, but it did kind of even out a little bit from last month. Much lower, though, than what we're used to seeing. It's down under 200 to 192. That's 27.3% down from last year. And again, this is less concerning for me because it kind of makes sense with what we're seeing as far as the number of homes on the market, right? If we don't have as much out there to buy, there's not going to be as many pending sales. And so I think the reduced buyer activity, along with the reduced number of homes available, is going to kind of keep the market consistent, kind of hold values fairly consistent. And I think that's why we haven't crashed like a lot of the big markets have, or it's one of the reasons. There's a few reasons that we'll get into later, but a lot of these bigger metro markets have been having a really hard time this year. And home values are just crashing because people can't afford to live there. Again, looking at the past few years, we've been pretty consistent, right around 243, 262, 264. It's all been right in the same range, even in the slow months, and now we're significantly lower. So this is an anomaly, and it's something to keep an eye on, but I don't think it's too concerning compared to the number of new listings coming on. I think we need to get the new listings up, and the buyer activity will follow when the spring hits. Number of closed sales, again, pulled back major this year, but it has rebounded a little bit since last month. We're currently at 223 closed sales for December. That's down over 30% since December of last year. And again, it comes back to the same factors we've already mentioned. The buyer pool is smaller, the number of homes available are smaller, so there's going to be fewer transactions. The previous December is 329, 343, 326. Again, a lot more activity than what we're seeing now. Again, we're nearly half of what we were looking at in the previous years. Days on market. This one's interesting because it's been pretty consistent for the last couple of years, and we're finally starting to see days on market climb. That means that the buyer pool is sitting. So it's actually two things, right? It means your buyer pool is smaller, so you're not getting these multiple offers on a property within the first weekend. They're not selling instantly like there have been. But you've also got sellers now that are trying to price with, mid-2022 pricing, and they're hoping to squeeze the peak pricing out of people even though the market's been declining for a few months. So, you've got sellers that aren't quite wanting to price properly, and you've got buyers that just don't have the level of competition they've had in the past, and that's driving the days on market up. We're up to 31 days on market right now. That's up 287.5%, which is a lot over the last year. It's nearly a month on market on average. And so, again, that's telling you that some sellers are pricing too high and the houses are just sitting. Overall months of inventory. This one's pulling back again. We were sitting right around 2 months for a long time and did get up a little bit over 2 months. But now we're pulling back again down to 1.8. And again, that's just due to the lack of new listings coming on the market. We don't have enough inventory for people to choose from. Even with the reduced buyer pool, we still have less than 2 months of inventory for them. So we need more listings on the market. Sellers, if you have any plans to sell within the next couple of years, I don't see a better time than now, especially if the Fed keeps printing money. We've got 2 more years of current administration that loves to spend money and loves to print money. So it could be a rough road. I don't know. We'll see what happens. I'm hoping that when the market picks up again in March or April in the springtime, that we see things turn around. But it's going to depend a lot on what the Fed does between now and then. In summary, average home prices are still steadily declining as we close out 2022, which we expected. The market's unlikely to pick up again until the spring, but the values were still up overall in 2022. Price per square foot is holding steady at $218 per square foot. Even as average sale prices have declined, the price per square foot has stayed fairly consistent throughout 2022. New listings continue to fall sharply in December. We typically see a slowdown going into the holidays, but there is much less activity this fall and winter than we saw in 2019 and 2021. Pending sales and closed homes have fallen to the lowest we've seen in 3 years. Homes for sale are still declining all the way down to 1.8 months of inventory. And as activity always falls off during the holidays, plus the interest rate hikes that happened earlier this year, they do seem to be coming back down now. And all the talks of recession have folks nervous, and that actually creates opportunities for buyers for the first time in several years. A year ago, buyers were paying tens of thousands of dollars above asking price just to compete. They were paying their own closing costs, and they were a lot of times paying for their own repairs or waiving repairs. And they were a lot of times paying thousands of dollars more to cover a short appraisal just to have a chance at the house that they want to buy. Now, things are a little bit different. Buyers are able to negotiate a better price. They're able to get seller assistance with closing costs. We can stop writing the appraisal gaps, and we can get seller assistance to handle the repairs. You know what I mean? So because the same competition isn't out there right now in the home that you want, you're in a much better position for negotiating, and you've got a lot more leverage. Sellers, this is where we are. Prices have held up as well as we could possibly expect, considering what the Fed has been doing with interest rates in 2022. Tulare County is a highly desired and special market, giving us some protection. This is one of the things I mentioned earlier that I was going to talk about. In Tulare County, we are the lowest prices, basically the price of the homes compared to the income is the best in California. So they call it the price to income ratio or something like that. We have the best price to income ratio in the state. So for what you make, you can get more house here than anywhere else in California. And because of that, people are flooding here from LA, San Francisco, San Diego, the areas where they can't afford to live anymore. They're flooding here. And a lot of times they're either working remotely or they commute to work or, they're finding new jobs here in the Valley. But when you can't afford to live in your bigger cities, this is where people are coming in. So that's kept our market strong. It's kept our home prices fairly consistent. And it's going to give us a boost over these major metro markets. If you purchased a year ago or more, you should have strong equity in your home. This reduces the risk of a major wave of foreclosures causing a crash in home prices. Now, there are a few foreclosures starting to pop up. That it's starting to become a thing again, which it was utterly non-existent for a few years. But you're not going to see the wave of foreclosures that you saw in 2008. And so all this talk about a crash, I just don't see the factors that are going to lead us there. But again, give the current administration 2 more years and we'll see. That said, the Fed is committed to stamping out inflation, and even with rate hikes every meeting, the positive impact to inflation so far has been minimal. This was truer last month. I think we are starting to see some impact to inflation, but the problem is wage growth. Wages are growing 5% month over month the last couple months. So if wage growth is outpacing inflation, then we're going to go right back to people spending and inflation going back up. So it's going to be interesting to see how things end up over the next few months. In fact, many experts believe that the actual recession is coming in mid-2023, that we've kind of been softening things up for now, but rather than solving the problem, that we're actually delaying it. So we'll see about that. If you plan to sell your home within the next 2 years or so, this is probably the best time for you to do so. Inventory is low, new inventory is extremely low, homes priced properly are still selling quickly, and you can make a nice stack of profit before things potentially get too crazy. And again, it seems like things are settling down now, but we'll see what happens in the spring when the market picks up. We'll see what the Fed is doing then, and I think that's going to be a major factor in whether we start to see the market rebound or whether we see things continue to pull back. So I want to thank you guys for watching again. Thanks for coming by. We'll be doing this every month. And again, my name is David Haun, your favorite realtor's favorite realtor. Come back soon.
Having a little trouble, ask David Haun. When they never get it done, ask David Haun. They gon' wanna give a hand, ask David Haun. Need someone to set the day, ask David Haun. David Haun, David Haun. When they all falling short, pass me the baton. Can't handle your inquiries, a marathon. And can't nobody do it better, man, than David Haun.